Neanderthals, what's going on? Just wanted to give a quick update before FOMC. Careful with leverage today. Today's the day you give it all back, you know. Expect a lot of volatility today, even though everyone sort of knows that rates are going to get cut. We don't know if it's going to be a quarter point or half a point. Regardless, the algos are going to be on roids today. So they're going to be on a batch of 3 cc's of Trenbolone. Let's go. So just be careful and try not to get into new positions today until the dust settles. The idea would be if you're already in a position that's deep in profit and not at risk of getting stopped out, I mean, you can keep those open, but to open new positions when you know they're going to take both sides, it's just not a wise move right now. So let's get into the update. Yesterday they took this internal high. There's a huge liquidity pool at the top. The lows already tested the deep value or the OTE fib of the range, right? So if you just kind of fib, TradingView's been fucking with me so much lately. Alright, here it is. So that's your OTE fib. It basically front ran the 786 and then went for the internal high. So you could see a very clear rejection on the 4 hour. That was an SFP, followed up by a second candle that rejected it. So that's a very clear sign that it's probably going to want to draw down. After taking the high, what you're looking for is the first 4 hour imbalance to hold, and it's trying to right now. So it might actually hold. What I like about that specific imbalance is you can see there's a bearish imbalance to the left of it. And it would treat it, when they overlap, they're usually a pretty good support zone. So if it holds here, you're basically inverting a bearish imbalance that we had on the way down into a bullish one right here. And then the overlap is pretty much the sweet spot where we're holding. So this is bullish for now, but if it starts rejecting and closing, I'd say 1 hour candles below it, then we're probably going to draw lower into a liquidity pool that I see between this one and this right here. Overall, this was part of a larger market maker model. So I posted this several times with updates, but the idea is the sell program was activated above these highs. So there was a huge accumulation of liquidity here. Once those buy stops got ran, you had some order pairing here and then started to close and create distribution zones. Below these lows right here, we had a bit of a buy program activated, which was confirmed when we closed above this wick and then used this imbalance to continue moving up. So overall, this is in a bullish structure on the 4 hour intraday with the target up here at 65.6. Within this range, you have two dealing ranges that I'm watching. Basically, you have a daily dealing range from this low, the wick, to the wick that took out the internal high. So that's the dealing range. Smart money's looking to distribute in the green, which is premium, and typically they're going to be looking to buy or add to positions in the gray. So anything below equilibrium right here is a buy. What I look for within this market maker model is once you've confirmed buy program, there's going to be usually 1 or 2 accumulation, reaccumulation zones. This one's a little bit weird because it's just moving in an uptrend. So the setup I'm looking for is not exact, but basically in discount within this range, you have all this liquidity piled in, and I'm looking for a continuation purge right here. So if we start engineering and drawing down, like I suspect, something like this to continue the move into the high, which ultimately I think is going to be the target. We won't necessarily get there today, but within the next few days, I'm looking forward to reprice. Going into FOMC midweek on a Wednesday and selling off into FOMC is typically a bullish sign. It means that they're creating space for the long to have enough meat on the bone for the long, right? So if they already drove the price up, there's really not much left in the move. Typically what they'll do is bring it down into an area where they can liquidate stops just before FOMC and then reverse the trade into the bias, which is going to be up here. So my intraday daily bias is at the target. Low time frame is into these stops, and I'm looking for a purge of these stops to continue and potentially get that accelerated move to 65. So if we break this down even more, here's our 15-minute structure. Posted this harmonic until they close below B. Right now they're using it as support, which is bullish. So until they actually close below this, I mean they did, but it was immediately bought back. What I look for usually with these harmonics is an obvious close and market structure break below, and then a retest of B to run to the actual target in the zone. So we haven't had it yet. What this could be doing right now is rebalancing that 15-minute candle before doing the inversion. My bias is still down on low time frame, and I posted this as well on X, where I thought maybe they would engineer buy side liquidity all the way down into FOMC with the idea on low time frame to nuke all these sell side stops right here. So you have a ton of liquidity basically right here. They're not trapped yet, but if they bring it into this zone, they'll be trapped and they're going to start feeling pressure. So what I'm looking for is them to bring it into the 886, maybe get some relief going into it, engineer a little more liquidity in the zone, kind of like this. So now you have this zone, and these stops. You basically have a huge amount of liquidity in the range. And then right on news, basically fast move down, kind of like a double purge. MMXM trader talks about this, where you'll purge the highs, which is the bias. So your daily bias is up, so they'll purge the high false move, then another one to purge the stops, which is another false move, and then the actual move on a news day, which is up to your daily bias target. So ultimately, I think this harmonic is just framing the wave structure and creating liquidity for that move up. And then what you'll get is the inverse of these zones. You'll have a liquidity pool here, 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 maybe a couple more on the way into FOMC, and then run it back all the way to 65. So I'm in the short, still not comfy, obviously, because this move can be taken back with one candle, like 2.66%. I mean, there's a bit of space, but it's still not comfy until we get down here. Once we get into this zone, I know the draw, my draw was accurate, and it's likely to take them at FOMC. So let's see how this plays out. Also in the range, what they're doing now, there's a 1 hour order block right here. So order block traders are basically committing their liquidity below this stop. One of my favorite trades is targeting order block stops, just because order block traders are always trained to put their stop below the wick that formed the order block. So as it lingers in this zone long enough, it's giving people time to enter the long. So let's say it does this for a little while longer, everyone's stop is going here, and then that's going to be kind of like the premise for how they accumulate liquidity in the zone for FOMC. So that 1 hour order block is right now building up liquidity. The red box right there is your 4 hour inverse fair value gap right there. So they're using it as support as of now, but you could see the 4 hour candle is very undecided at the moment. You know, it's just a Darth Maul basically. So we'll see how this resolves. If it resolves with a bullish candle on the 4 hour, I might start to deleverage the short and then add a little bit higher. Maybe look for this kind of setup. So short-term low, intermediate term low, short-term low with more downs. So that's the other setup I might be trading. Regardless, I think it's down until FOMC, false move down, actual move up, some sort of a double purge on FOMC, and then the actual move, which is going to be to 65K. The other reason I have this zone marked in down here is there's a high volume node within the range. So if you just mark out mark out this entire range volume, you can see our value area low within the range and this high volume node basically sits right here in that 2-hour order block. So that should behave as support if price starts coming down or drawing to the actual liquidity targets. So there's huge demand here right above all these, right below all these stops. This is called an inducement setup, where they induce liquidity in the range and they have resting passive bids waiting inside that demand zone. So the idea would be to just keep building liquidity and then FOMC into that demand and then run it back. And then obviously there's one more POI down here, this 4-hour order block with the high volume node somewhere in the top third. I don't think we get there. We might, but I doubt it. 4-hour, there's also a shark harmonic. So here you have 50% retrace into the 113. And if we start closing below B, then we're likely going to target down here at 50K. So that's going to be the 4-hour target. I don't think we're doing that just because the buy model is going to be targeting at 65. So let's see how this evolves. The last thing I wanted to show was kind of like a convergence of targets. I have here 56.7 to 55.9, and the reason is if we drop the time frame into the 5-minute, you could see your last 5-minute manipulation that took out the 4-hour highs. So this is your 4-hour high, right? We go back into the 5-minute, you could see here's your low. There's your swing that took out the internal high. So if we use standard deviations for any pullback within the range, so this is just a corrective retracement within the range, you would target a -2 to -2.5 standard deviation. So that's going to be that projection. Then once the downtrend begins, here's a manipulation into, so within this dealing range high to low, this manipulation started here into there, which is going to be above equilibrium in this dealing range. Projecting that out, the extreme part of the move, -4 standard deviations, lines up with the 2 to 2.5. So that's kind of how I got a convergent target there. And on the 1-hour, you could see there's a very nice untapped bullish imbalance right here, overlapping that 2-hour demand. So this is going to likely be where we start to decelerate if we push down. And then I would expect if it lingers long enough here, buyers will get confident and start bidding again. So that's pretty much the setup I'm watching today. Again, you don't have to trade Mondays. Sometimes you don't have to trade Tuesdays. But when there's FOMC and a news event on a Wednesday, there's good volatility. So traders actually have that movement we need to make money. And obviously Friday is another good day to trade. But Today, if you're not in positions already that are in profit, again, I can't repeat this enough, you'll probably get taken out if you enter anywhere in this range. None of these stops are going to be safe going into FOMC, so don't open any new position. Wait for the actual manipulation to jump in to either a long or short. All right, guys, cheers. Happy FOMC.